You're listening to the Rent Roll Radio Show with Sterling Chapman. Hey, Rent Roll Radio listeners, welcome back to the show. Today, we're joined with a special guest from my hometown. We have Taylor Jernigan from Baton Rouge. Taylor, welcome to the show.
Thank you. It's good to be here.
Can you just give us a little brief rundown of kind of where you started, how you got into real estate, what you've accomplished this far? Just kind of tell us your story.
Yeah. So it all started, I'd say about May of 2018. I was still in the Navy, but I was on my way out. And I was on duty with another guy. He was talking about real estate, and it didn't hit me until I had a conversation with him last week that I had this conversation with him that day. And the same day that the thing that really started me into it, I was having a conversation. He's like, dude, once I get out of the military, I'm moving to Houston. I'm going to buy some rent houses, have them pay for more rent houses so I can buy some more. I was like, dude, that sounds dope. I didn't really have a plan at the time. I was going to school to be a financial advisor. So I got my associate's degree. I just didn't continue. Yeah. So this doctor, his name was Dr. Butt. And as soon as I did my first real estate deal, I called him up. I had dinner with him and I thanked him for getting me into it. But he had walked by and he said, hey, I hear y'all talking about real estate. Have y'all ever heard of Ron LeGrand? And I was like, no, who's that? I'm sure you've heard of Ron LeGrand, huh?
I haven't.
He's big into wholesale and just big into real estate period. He's just an older guy. But he had mentioned him and I was like, dude, I don't know. Let me look it up. So I looked it up and I did not sleep that night. I did a bunch of research, didn't do any of my homework. I was in 2 classes at the time. Didn't do any of my homework, stayed up, and I was a dental assistant. So I was a spit sucker, basically. And I worked with him all day. I talked his head off the entire day. I was so pumped about it. And then from that point on, it was like early May of 2018 that I said I was going to do real estate for life. Like it was going to be what I was going to do.
I bought my first rental property in May of 2018 as well.
Dude, maybe it was a sign.
Yeah.
It's funny. Yeah. So I started that and then I got into wholesaling. And since wholesaling, I started buying, flipping, and holding properties. I've actually never flipped one. All the renovations I've done, I've held just like you do. Sure. But I don't hold them in the traditional way. I sell them rent to own because I don't want to deal with regular tenants with the problems.
I would love for you to tell us more about that rent to own process because I've never rent to own anything, but I've had on this most recent house I renovated, I've had like 5 different prospective tenants ask me if I do it, and I didn't really know like how to put it together. So I'd like to hear more about that process and how you pick your numbers, what you do on the front end to put that together.
Okay. It's nothing really different that you do on the front end. Well, I guess you can kind of save yourself some money on some renovation because you don't have to go as fancy as if you were flipping it. You know, it still has to pass all the inspections. You still want your tenant buyer to have an inspection because, you know, they are making a big investment in buying a house, but they're just buying it at a future date. So you can do less in renovations, like as in not as fancy because these tenant buyers, they have less options because they don't want to rent, but they can't own for some unknown reason. They can't own, so they would much prefer to do a rent to own, which is where you get a portion of a down payment. So you've got your lease, which is the normal rental, then with your option to purchase, which they pay money to purchase the option to buy the house. And so with money down, you get a better quality person.
Sure.
You know, they want to own it.
Okay. So first of all, how much do you put down? And then the rent on the lease, is it more or less than you would typically ask for rent? And then the agreed upon future date, is it a price? Is it above or below what you could just sell it for if you were just flipping it?
To answer the first question, as much as they want to put down. So say you've got a property that's worth $150,000. Some people do 10%, others do 20%. It's all what you feel comfortable with. Me personally, I don't want to put anybody in any house that I have if they are putting less than $10,000 down. Now, the amount of money they put down, say your purchase price is $150, they put $10,000 down, now the purchase price is $140. So everything they put down goes towards purchase price.
Okay. Does the rent go towards reducing the purchase price as well?
So on a true lease purchase, no. I do a lease purchase on terms. So mine, I sell at the going rate right now for owner finance is 8 to 12%. So I sell mine on 10%. And as far as your terms, I do 2 to 3 year, but one of my deals I did a 5-year term just because that's what the lady wanted. She wanted to do a 5-year. So they are getting principal pay down. You know, they have the principal, interest, insurance, and taxes that you're responsible. You have to have the insurance on the property as well as the taxes because the title's in your name, but you kind of add it into what they pay.
So you're owner financing these deals?
Essentially. So you can do a lease purchase / bond for deed. The way mine's written up, it's a lease purchase on terms.
Okay. So how do you fund the property? Are you paying cash for these properties? Do you have some type of mortgage on them? Or what
Okay.
are you on your end?
So private investors. So there's a private mortgage on the property, or one deal that I did with a investor-friendly bank. But yes, I have debt on each of these properties. I've only ever bought one property with my own cash just because why do it whenever I could pay somebody else interest on it and I could, expand because I don't have that much cash. Yeah. I wish I had like millions of cash to be able to buy all the stuff I do. So I use either private investor debt and I typically pay around 13 to 15%. I know you pay a little bit more than that, but that's typically where I am right now for my flips.
Cool. I'm gonna have to renegotiate with my investors now.
Hey, you already gave them a taste of it, man. They're not going to go down.
Yeah, it's hard to go the other direction.
The last question you had about the value, can I sell it for at the rate that you would a flip, or if I go higher or lower? So generally you go higher because you're selling it at a future date. They're getting locked in now, but they're purchasing it in 3 years. So you kind of mark in the appreciation.
Okay, that was my question. And because when I was running the numbers, the question became like, well, this is what it appraised for today, but if they don't buy it for 3 years from now, I could probably sell it for more in 3 years.
Exactly.
So my other question is, if you're seller financing it to them or doing it on terms, your investors are obviously comfortable leaving their money in the deal while
I refinance.
Okay.
If I'm going to do something like that, one of the banks I was working with, most banks require 6 months seasoning. This bank, 3, and they're cool with it. And then you can do the cash out refi, just like I saw you had posted one last month. You do the exact same thing to cash them out.
Okay. I got you. That's where my confusion was. Cause I mean, we all buy the properties with investors, and I didn't know if you were doing the cash out refinance or if you were leaving your investors' capital on it and like kind of doing the arbitrage of just like kind of
costing myself too much money, man. I'm not getting cash flow if I'm doing that.
Yeah, for sure. Well, tell us more about your wholesaling business. And we don't talk a lot about wholesaling on this show because it's typically a buy and hold show, but you have a pretty good sized business going on. Can you tell us about how you got that started, how you run it? I would imagine you probably utilize some virtual assistants to do part of your business. Can you kind of tell us, how that started and kind of how you've expanded it?
Yeah. So back in May of 18 is when I heard about it. I started doing some research on Ron LeGrand. I got his little $1 course that taught me enough to get in trouble. Yeah. So it taught me just enough to like want to go out there and mess up. So then I purchased another program and it kind of like laid out exactly what to do. So there's so many different types of marketing. Like, as I'm sure you get your deals, you can market through realtors. You can say, hey, I'm a cash buyer. If you come across anybody that wants to sell their property, at a discount fast for cash, I'm your guy. Or there's bandit signs. You can do pay-per-click, which is Google ads, Facebook marketing, texting, cold calling, direct mail, ringless voicemails, so many different ways. I've done ringless voicemails, direct mail, bandit signs. I've not done Facebook ads or PPC. The most expensive are PPC and direct mail.
What are your favorite? What do you think you get the most responses from?
I text. I get the highest response rate from texting.
So what do you mean you text? You find out who the people are and you personally send them a text, or you have some service that kind of blasts everybody a text?
So I use a service called Lead Sherpa, and this is where my virtual assistant, she's my assistant, like a personal assistant, as well as she handles my marketing. So she sends out text messages, and to keep it legal, it's not like you hit one button and it blasts like 1,000 text messages. She types in our message, and then you have to hit the send button on each different one that you're sending. So it's not like super fast. Like you can't send 1,000 in a minute. She types it in and then hits send in a spreadsheet, and then it sends to each address.
Awesome.
And then she
So
just responds to those. And if somebody wants to sell, then I jump on a phone call with them, or I get my acquisition guy to do it.
awesome. How many properties have you wholesaled in the last 2 years?
Probably 25, 30.
Oh, wow. And what's your average you make off of each one?
So it was higher, but it's starting to go down.
What do you think that
I'd say
is?
around 10. The more I knew, the more it messed me up in the business, because the more I knew like what the property was,
You're
I
cherry
started.
picking them and keeping them for yourself.
I do cherry pick, definitely. I started to do that. So my bigger wholesale deals are ones I'm keeping. But also it's because the more I knew in the business, I knew what the renovation costs were. I knew what the ARV is on the property. It made me come in higher on my offers, which already diminished my profit. So before I really knew anything, I just was like, hey, you want to sell, I want to buy. Let's just talk about what you need. And then I stopped going from what they need to what do I think I can get it for. And I would always offer a little bit higher versus, listening to them and hearing their problems. And they'll be like, look, I only need 50,000 to walk away from this and I'll be happy.
It's crazy how that works.
I could
isn't
solve their problem right there. Yes. So the more I knew, the worse I was at it.
Yeah, no, the more I evolved, probably the more I pay for deals because I don't, I don't go in and lowball. I'm like, look, I know what I need to make what I want to make. So just
exactly.
here it is.
Yes. It was my first deal ever. Wholesale, I made 35,000 on a wholesale deal. Knew nothing.
That's flip money right there.
That is flip money. That's around my average flip that I make.
Awesome. So most recently you've gotten into apartment complexes. Can you tell us a little bit about your baby? I saw you just closed. Was that 2 weeks ago?
Feels like longer now, but yeah. 2 weeks ago. That's where I want to go. I want to get out of the wholesaling game, or at least sell it off owner finance to my acquisition guy, help him out with his career, but catapult me into multifamily because that's where I love Tim Bratz, and Tim Bratz preaches legacy wealth. Yeah. And I want that legacy wealth. I want to own a bunch of stuff. I want to own 5,000 units, averaging $100 per month per unit, which I call doors. So that's my goal, to own that many. And I would not own the entire thing of each one. I'd like to syndicate or joint venture on everything, which is kind of like what we did on this one deal. But that's where I want to go for the passive income.
I think that's where we all want to end up. Can you break that deal down for us? Tell us how you found it, how you funded it, what your plans are with it.
Yeah. So our plans are a 7-year hold on it. We want to hold it for 7 years and then sell it off, because hopefully by that time we'll, a 32 unit will be small and like not worth keeping versus having the bigger units. We found it. It was actually a listed property. I never go after anything listed, but it had been listed for a while. And we talked to one of the owners about a different property in Denham that I was interested in, but they had just sold that one. And he said, hey, funny thing is, we've got this other one. And I was like, yeah, we saw that one probably about 6 months ago. And I was like, we put in a super low offer on it and y'all just laughed at us. So I put in a pretty low offer this time and I didn't get the same reaction. I was like, oh, there might be something here. And then we ended up getting them off their asking price, over $300,000, which paid for our renovation on the property.
Awesome. So how did you fund it?
So we went with State Bank, so a local bank that already held the loan. So we just contacted them. We built a relationship with the bank and said, look, hey, this is what we plan on doing. We had to submit our personal financial statements. So he knew that we could back it. He knew that we could back it. He already knew that it was a pretty much an unperforming note as is. So he just wanted anything to do to get it into somebody else's hands that may just make it better. So I'm thinking we just kind of got lucky, as well as I've been in real estate. My two other partners, we've been in real estate for a little while. So we got a little bit of a track record that probably helped us out as well.
So did you assume the existing mortgage or did they give you a new one?
I tried so hard to assume it just because that would have been the easiest route. We wouldn't have had to raise any capital, but we ended up having to get our own loan. We had to raise 20% of the down payment, 20% of the purchase price, which was, I think we had to raise a little over 150,000, which we did. And I gave 15% return on the money.
You raised that in a debt manner. So the people you raised it from don't have any ownership. They have a promissory note that you're going to give them 15%.
Yes. And now every deal is different. That's just all we could offer from this deal. And so we found somebody. They're very happy making their 15% because he was not making anywhere near that where his money is sitting right now.
So how do you plan on, I'm assuming you plan on selling it for a good bit more than you bought it for. Is this a value add? Is this a cash flow property? What do the numbers look like? What are you getting on your end from this project?
So it's value add, cash flow, tax write-offs. But so it was super under rented. I think it was averaging around $595 per unit, which was kind of called for because it was pretty shitty units in there. We went and walked quite a few of them and found, just horrible living conditions. The only thing they did recently was put a new roof on it because it had to for insurance. Or else the insurance like, man, look, you're putting a new roof or we're just like cutting your insurance. So they had to do a new roof. Most of the AC window units don't work. So I think it was 65% occupied. All those units that weren't occupied weren't really livable. Like we have to rip out like all the cabinets, man. They're just disgusting, like waterlogged, mold. So we're just ripping all that out and doing a clean slate.
Yeah, vacant properties don't age well in South Louisiana, do they?
Yeah, that humidity, man, the power was off in these units. That and the window units just didn't even work. So yeah, it was a great breeding ground for mold.
So how much do you think you're going to end up cash flowing off of it every month once you get it stabilized?
So it's going to cash flow anywhere from $9,000 to $10,500 a month.
Oh wow, that's awesome.
So it's a great cash flow play. Like it's pulling in over probably close to over $100,000 a year cash flow.
So does it at its current under rented high vacancy status? Does it currently cover the note?
Yes, surprisingly, yes. A lot of the tenants in there were not paying rent during Corona.
Yep.
But
we just opened up yesterday, huh?
Yeah, but they had paid. I think on the 6th we could start filing for evictions, and we did have to file for a few because they just weren't wanting to pay. Drug dealers and prostitutes were living in this place, man.
Oh yeah.
So we had to. We served them.
I drive fast through Tigerland.
Yeah, dude. It's starting to change, and we're trying to buy more properties in there because a few, I think, big time investors have bought in there, like way bigger than just a 32 unit, but they've bought the bigger stuff and starting to turn it. So we're expecting quite a big jump in value based on the income approach. If the cap rate is still a 9.85 to a 10%, we're going to appraise at or higher where we expect, which will pay out our investor and give us a nice tax-free chunk on the refi.
What's your plans from here? You got another one in sight, or you gonna?
Yes, we've got a few in sight. I'm meeting with investors pretty much every other day, or having a conversation with somebody about raising some private capital to try to take down bigger deals.
Awesome. Are you planning on doing more debt with those investors, or are you looking at like a true syndication model where you're giving them equity shares?
So we're looking at not quite syndication, because I know a lot of legal things go into syndication, but we're trying to just do a JV partnership with one investor to take down the deal and give equity, like a waterfall type deal.
Gotcha. So where are you looking to invest in the future? Are you planning on staying in Baton Rouge, or?
Definitely not staying, but investing in smaller units in Baton Rouge, yes. I don't want to get into anything too big in Baton Rouge, just because I think last year there was like 4,500 vacant units in Baton Rouge.
Yeah, they've built a lot.
They're overbuilding the shit out of it, like A-class units that just aren't getting filled. I don't know why the hell they're doing it. If they just need they're evading taxes or something, man. But they're overbuilding. But I want to go to Houston. I want to go to. I love Texas, like the Houston, Dallas, Austin markets, maybe even San Antonio. I want Alabama and Florida. I like staying in the Southeast.
Yeah,
because I don't want to go up north where that snow, man. That's a whole nother beast, and the deal's got to be perfect, and somebody's got to live up there to be able to want to run it. But I don't want to buy anything up there.
So, what advice do you have for somebody who's looking to get started in real estate? would you suggest they start the same way you did with the wholesaling and kind of work their way up, or would you have done it differently knowing what you know now looking back?
Oh, wholesaling all the way. I say wholesaling because you get to meet so many different people. You get to learn how to negotiate, learn how to talk with people because you're going to talk with a lot of people in wholesaling. You meet a lot of investors. I've met so many investors from just wholesaling, just like being in the real estate game. It's helped me out so much, like just building those relationships. And now I've learned how to raise that private capital as well as wholesaling. It's simple, but it's not easy to sustain a business on it. Like it's simple to go out there and wholesale one property, but it's hard to wholesale 2 to 3 to 5 properties a month, like to maintain the business. You can build your liquidity from wholesaling, get a little bit more of a track record, and then you can get into buying and holding single families, flipping single families, getting a duplex, fourplex, and then even taking down this stuff. I could have done this sooner, but it was a confidence thing for me. But I definitely recommend starting at wholesaling.
Yeah, it's definitely like every step you take in real estate, it's a slight confidence like thing,
Yes.
because I have zero like handyman or construction background.
Same.
Like my wife makes fun of me. I'm so bad at fixing things. And, when I went out and bought my first single family house, there was like pretty much nothing wrong with it. So I paid like retail and I put like 15% down. And I mean, we had to fix some floors and we had to paint some walls and like a couple other little knickknack things. But then after I was done with that, I felt like, okay, well, I know how much it is to replace floors. I know how much it is to paint walls.
Yes.
And then the next one, it was like a very similar deal where like I had to do a few extra things and it adds up. And each time I did it, it built my confidence personally and it built other people's confidence in me that me.
That's the main thing. Yeah.
And then after that, I was like, all right, I'll go burr a property. Like, because before that, I what if it doesn't appraise? I mean, I didn't sleep for months waiting for that first property to like come back appraised. And when it came back appraised right, I was like, oh, well, the appraisal came back right. I'm confident to go do it again. And then I did it again. And now like, I don't even blink. I lost so many deals because of that hesitation, because that confidence wasn't there.
Yeah.
But with every little thing you do, you just gain more confidence. You're willing to take on bigger challenges. And it's like a snowball effect.
Dude, yes, 100% it is. And you're just getting that track record, man, to where now you can say to future investors, and you're like, look, I've done this. You can go touch, feel it, and see it. As somebody said yesterday, you can piss on it. Yeah. It's real. Like, I've done this. You can see that I've made this come true and it's cash flowing. So that gives other people confidence in you to be able to do more and potentially bigger stuff.
Awesome. So real quick, we have our radio round where I just like to ask our guests a few questions to help the listeners get to know them a little bit better. The first question is, what's your favorite book?
It's a negotiation book called Never Split the Difference.
Chris Voss. Yeah, that was a good one.
That book, I read it 3 times, man. 3.
So I listened to it on Audible. I cheated.
Yeah, I said read it. I listened to it on Audible.
So on this topic, so I always give my guests a heads up about the questions in case they want to think about it. And when I was telling Taylor before the show, I said, look, I need you to think of your favorite book and don't say Rich Dad, Poor Dad. He actually told me he's never read Rich Dad, Poor Dad, which is, I think he's the first guest on this show or even real estate investor that I've ever talked to that's told me that.
I've never read it. And I feel like I'm too late now to read it because it would just open my eyes to what I'm already doing and what I already have seen.
Absolutely. So I would still recommend you go read it.
I might Audible it.
Audible it. Yeah. Listen to it on Audible. The next question is, what is your favorite quote?
Ain't first you last, man. Ricky Bobby.
Ricky Bobby. Gotta love it. Gotta love it. What's your favorite thing to do when you're not working?
I get a lot of flack for this, but I play my video games.
Oh, you're a gamer?
I like playing games and hanging out at my pool and talking business. With anybody I see, I talk business with.
How old are you? 26, right?
Yep.
That's your generation with the video games.
I've gamed since I was 15 years old. I don't play competitively anymore. I don't have the time for that. But it's like I don't know, I hang out with some of my friends that, don't do real estate and I don't talk to them often. So it's like a release thing. Like I get home from having a busy day and I just want to pop in my chair and do nothing for like an hour. It's like I just release, man.
I hear you.
I like it.
So where can our listeners find out more about you and get in touch? How can they get in touch with you?
You can find me on Facebook. I know a lot of people don't do this, but I'm about to give out my number because I
always do.
I answer any calls. You can text me. My number is 225-304-2625. Or just find me on Facebook, Taylor Jernigan. It's a picture of me and my wife. Everybody thinks I am my wife because my name's Taylor.
I get a lot of replies that say yes, ma'am, when I'm like listing properties.
Yeah, everybody thinks I'm a girl, and having a picture of me and my wife doesn't help.
Well, and you've got a unisex name, so I'm sure that hurts you as well. Well, cool. I'm actually a huge fan of your wholesaling business, and I'm waiting for you to send me my next deal. So
if I don't pick it and buy it,
that's what I'm saying. You need to focus your energy on the apartment complexes. Go ahead and send me the deals.
I want to so bad.
Awesome. Taylor, well, thank you so much for joining us, and I'm looking forward to keeping up with everything you're doing.
Yes, sir. Thank you.
Thanks for tuning in to the Rent Roll Radio Show, brought to you by Crestworth Capital. We hope you enjoyed the show, and if you did, please hit the subscribe button and leave us a rating and review. You can also visit us at crestworthcapital.com or rentrollradio.com, or follow us on Facebook at Rentroll Radio or at Crestworth Capital. If you would like to reach us, feel free to shoot us an email at info@rentrollradio.com or sterling@crestworthcapital.com. We hope you come back next week to join us on some more of our journey. Until then, happy investing.